let's pivot over to Nvidia. This is benchmark. They're raising their price target on Nvidia. They're raising it to $170 a share. They previously saw it at $135 a share. They are maintaining a buy rating on the stock. They said they had hosted Nvidia for a fireside chat. They say coming away from that fireside, they believe that the company is just well positioned to continue its leadership in AI. They anticipate above expected revenue and earnings growth for the foreseeable future. So they just increasing estimates for fiscal year 25 and 26. And they said that that's where they see Nvidia going. We know Nvidia sold off yesterday amid that rotation out of tech. But again, Nvidia, we know, has been the leader with within the AI space in terms of this kind of new era, this modern day gold rush. Nvidia continues to be the leader, and benchmark is just adding to that, especially with what they've seen recently. And then just the stronghold they have with GPUs, they're so far out ahead of everyone else. It's just really hard to compete. And benchmark sees that even when you look at like a competitor like AMD, they've just been behind, and that stock is down a little bit today.
Nvidia stock keeps thriving, to no one's surprise, in the light of the increasing demand for their products and the anticipated Blackwell release, as benchmark analysts have just raised their price target on the stock from $135 per share to $170. As of the time of this video, Nvidia stock is trading at nearly $130, so this new price target implies an upside of 30%. This incredible news for Nvidia stock investors, as this decision from benchmark came at a time when some analysts were starting to doubt Nvidia's future, believing that the firm had already fulfilled its potential and the golden days are over. In today's video, we will discuss why benchmark has decided to raise their price target, disregarding all the negative analysis. Additionally, we'll talk about whether Nvidia stock is a buy right now or not. So, don't miss out. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
You were calling for, or are calling, you think a $6 trillion market cap for NVIDIA is possible?
Yeah, possible this year. And so
this year,
the reason is, yeah, by the end of the year. And here's my
hold on a second. So wait, NVIDIA is a $3.2 trillion company, and you see $6 trillion by the end of the year.
I could see this thing hitting up, between 200 and 250 per share by the end of this year. And so the reason is that in the last 5 years, if you go back and look at what, how the forward price earnings multiple has varied for Nvidia over that 5-year period. And this is true for most stocks. Like you go through these like ups and downs constantly, where there's this like euphoric reaction to maybe they have this like incredible earnings report, and suddenly like the company becomes very expensive on a go forward multiple basis. And then they have like a more humdrum earnings report, and suddenly they, those forward multiples drop dramatically. And despite the fact that obviously the stock price for Nvidia has like just been ripping for over a year now, since like May of 2023, and it's, I don't know, it tripled last year, and I think it's doubled this year. The forward multiple has actually been below the mean for most of that move. In other words, like on a go forward basis, it's almost like Wall Street has thought this was going to be like kind of like, okay, they had another good quarter, but now it's going to slow down significantly from here, and we're going to kind of go back to very low levels. That, in terms of like how they were pricing this thing, we're not, and yet like over that 5-year period, there have been 3 times where the forward multiple has gotten up to like, there was one time it was like 55 times forward earnings. One, it was like 63 times forward earnings when it peaked out. And there was one time where it almost got to 70 times forward earnings. And then it kind of quickly receded. Most of the last year, this thing has been like one standard deviation below the mean on a go forward basis. And just right now, This thing is about 39 times forward earnings, 40 times, which puts it right at the mean. So my belief is that, we're now kind of going up again with Nvidia, and it would not surprise me that we see another strong earnings report this fall.
Nvidia stock has gone up by 2%, right after Benchmark decided to join the firms and analysts who have raised their price targets on the stock recently. Benchmark's analyst, Cody Acree, said in a note that they had the opportunity to host Nvidia for a fireside chat discussion with investors, where they came away with increasing conviction that the company is well positioned to continue its leadership of the AI industry, with above-expected revenue and earnings growth for the foreseeable future. According to Benchmark's analysts, Nvidia is confident that no matter how many chips they will manufacture, the demand will always be bigger. Therefore, the demand for their H100 and H200 chips remains robust, and Nvidia expects these chips to maintain the same enormous demand until early 2025. Benchmark's analysts were also encouraged to make such a decision based on their confidence in the resounding success the Blackwell GPUs will have once they're released. And they have also added that Blackwell is currently in full production, with first revenue expected in the third quarter and global availability into customer data centers expected in the fourth quarter. Furthermore, Blackwell is set to launch in more than 100 systems, surpassing Nvidia's last chip, Hopper. On top of that, while major cloud providers are developing their own AI chips, Nvidia's established market position, robust ecosystem, continuous innovation, and strategic focus provide a strong buffer. The company's leadership believes that these strengths will help them maintain their edge in the competitive landscape of AI hardware. So, with all of this said, what might be coming next for Nvidia? Let's find out. Hello everyone, and welcome back to Investocracy.
Yeah, AMD a little lower, Nvidia a little higher. Chips kind of mixed up right now, but a little positive today. And 170, these price targets don't mess around. People are not afraid to slap some pretty lofty stuff in their expectations for Nvidia. So nice timing to maybe instill some confidence when needed today after Nvidia fell short of its previous high yesterday too. So semiconductors broke out, but Nvidia kind of fell short and maybe double topping. So a little positive tone here. Going to help, I think, to remind people why to stick around. 170 would be nice.
Benchmark has just joined Wolfe Research, UBS, and KeyBank as one of the gigantic Wall Street firms that have raised the price target on Nvidia in a very short period. And this is extremely positive news for Nvidia, as the company needed such a boost to dismantle all the doubts towards it. And analysts keep betting on Nvidia because they believe that it is so hard to beat, and they see a very big chance in Nvidia maintaining its position as the unmatched giant of AI chips, as the company doesn't only offer eloquent GPUs, but an entire ecosystem of services and products that runs the company's AI platforms. In fact, Nvidia has put the focus on not just chips, but on a full computing platform, so if customers invest in the company's software stack today, they'll benefit from the innovations that will keep coming year after year. Although Nvidia's chips are more pricey than that of other competitors, the high performance of the chip significantly increases efficiency of products, lowering costs over time. Therefore, companies currently consider Nvidia the optimum path to creating high-performing products, from GPUs, CPUs, to networking interface cards and switches, and saving a lot of money on the long run. So, what does this mean for Nvidia's stock? Let's find out. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
That would be a seismic event. I mean, adding $3 trillion in market cap inside of a year, it's a whole other company, like three or four other companies. So, I mean, do you see it like, is it the next earnings report? Is that seismic shock? I mean, where orders just really, almost like we saw last year, they came out and they blew everything away, reset guidance up, and just changed everybody's thinking on the name.
Well, step away from the market, the dollars of market cap that are being added, and just think of it from percentage terms. Like last year, Nvidia basically tripled. like I said, this year it's doubled, and I'm saying like it could double again between now and the end of the year. And so it's either going to be at the August earning, the next earnings is in August, and then the one after that I think is November. So I'm not sure, but I think definitely we'll see evidence in the August report of initial appetite for the Blackwell chips. And we know that those things are priced higher than the H100s, H200s. So it might be then, but certainly by November, we'll have evidence of like the real operating results. And we'll find out if some of these bears on Nvidia who are saying like, oh, well, people have just been double, triple ordering and it's going to come back to earth is right. Or we're going to find out that, well, there's still insatiable demand for these chips. And this thing isn't going to let up real soon. And the margins on Blackwell are even like better than what they've been delivering for the last year, which has already like blown our socks off. And so I think, again, like I don't know if it's going to be August, I don't know if it's going to be November, but I think there is going to be this euphoric reaction. And if it goes back to a 65x forward earnings, you're there. You're there at like 250 per share.
Blackwell will definitely boost Nvidia's earnings to new heights once it's released. But that's not the end for the company's success and innovation. Other innovations in the years to come should act as new catalysts, specifically Rubin, which is Nvidia's next-generation AI chip that will follow Blackwell, and it's set to be released in 2025. Also, Nvidia has spoken openly on multiple occasions about expanding its supply chains to meet up with the demand, and once this happens, Nvidia's profits and revenue will increase massively. Furthermore, Nvidia's lead in the chip race and its unmatched progress in software services should be analyzed further as the firm invests in Databricks, one of the most promising and valued AI startups in the world. Nvidia is also a developer in Figure AI, one of the world's most important developers of humanoid robots. Besides, we believe that opportunities in robotics and AI software aren't reflected in Nvidia stock yet, and we believe that these applications are being overshadowed by their astonishing business of chip manufacturing. In fact, many investors don't take into account Nvidia's brilliant activity in other sections of the AI industry. Given all of this, today, Nvidia trading for 46 times forward earnings estimates still looks like a great long-term buy. But what do you think about Nvidia stock? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.